Awesome. So we are live for this workshop today to learn more about DeFi and DEXs. Thanks for joining us today, guys. I know that's not the first workshop of the day, so I hope that you still have like a lot of energy for this workshop. Today I have the chance to receive Nacho today. Hey, Nacho, how are you doing?
Hi, very well. Welcome everyone to this DeFi workshop. Yeah, thanks Chainlink for the opportunity to speak in live with you people. Hope you're building great stuff.
Awesome. Thank you so much for your time and for educating the hackathon's attendees. Maybe before jumping into your presentation, I don't know if you can introduce yourself in a few words to share more about your background.
Oh yeah, sure. I've got a development background, but I started in crypto like 2017, let's say. And yeah, we faced that bear market in 2018, so we started getting interested in crypto. Me and the people, the founders of DEXTools, were traders back then in 2020, 2019, and we come up with trading in Uniswap and discovered this cool protocol and started building data analysis tools to help ourselves to do better trading. And a lot of people just wanted to get nice charts and everything, so it exploded. And we're here. We've learned a lot through all these years. It's been 4 years already, and yeah, I wanna share some insights on what we've learned through this process.
Awesome. Yeah. 4 years in the blockchain industry means a lot of
Yeah,
changes, and really exciting news every single days in this industry.
cool.
Also, I will go back in the shadow and let you share your screen and
Nice.
go
Okay.
in the presentation.
So this workshop is thought for like everyone that has basic or little to no knowledge to DeFi and decentralized exchanges and let's say blockchain in general. So I'm gonna go first through a bit of history and yeah, go into DeFi applications. Yeah, what are DEXs, which is what we are experts at, and yeah, some risks you can face and some solutions that are already implemented, and explain a bit about analytics apps and APIs that could help you out in building your product. Okay, so first of all, I wanted to say, yeah, DEXTools is partners in blockchain hackathon. We're giving away two prizes. It is full money for you if you are the first project we think that best uses DEXTools API, or it's $1,000 if you're the second one. Feel free to register in that form, dextools.typhon.com slash claim dash API. And yeah, full support we're given under Chainlink server, hackathon category there in DEXTools channel. Yeah, we're also technical people, so if you feel like you need some support and let's say deploy with hard hat on your front end application, Web3 connections, whatever, yeah, we're open to help and yeah, so you could make your product work fast and correctly. So let's deep dive into DeFi already. Okay, so first introduction. Yeah, what are the traditional? How did traditional finance work? Well, how does it work already, and what are the problems that people is facing while using these tools, these finance instruments? So the first of all, traditional finance is centralized. All these assets are controlled by banks, by different institutions, and yeah, you got no control over it. They decide when to mint, when to emit these coins, and yeah, they also it's also limited to access for a lot of people. You got to demonstrate you have these earnings, or depends a lot on your background, economical background. So not everyone has access to this, and it's also limited availability. You don't get to trade every hour in the stock market. Depends a lot if the bank is open or not, or it depends a lot on the time zone as well. And there's you got the money, but you have to go to the bank. You have to rely on third parties and trust. So there's you don't really know what they're doing with your money in the background, and you don't have full control for it, right? It's also slow sometimes. Whenever you make a transfer, you have to wait 1 day, 1 week, or and you are subject to be applied high fees. So this is where DeFi gets into the game. When blockchain started, there's a lot of infrastructure that helps DeFi be a better finance service than traditional finance. The first one is that it's decentralized. Um, no one has the control of it over it. There's no third party you have to rely on. This is peer to peer. You can send anything to a different wallet, and it's going to reach its destination, and no one's going to block you. Everyone can get into this decentralized finance. You just need a wallet, and not even a wallet, but yeah, internet connection and maybe a wallet, and you're in already, and you can interact with every protocol around DeFi protocol that it's deployed into the blockchain. It's also available 24/7. Um, Nodes are already always I mean mining, and they're fully connected. You don't have to wait for anyone to open the door in a bank. Um, it's also fully transparent. You can trace all your transactions. You can see where the money came from. You can see if it's been approved, the transaction, and if it got its destination as well. So this is great benefits for us because we can build great analytic data from that. Also, you have the full control of your assets. Unless you use your private key, no one's gonna steal your money. No one's gonna block you from it. And yeah, by design, blockchain is secure and anonymous. So DeFi is secure and anonymous as well. Okay. So let's go through DeFi applications that are already in the space. There's a ton of them. I mean, most of the finance's traditional service just are mirrored into DeFi, but they introduce enhancements. So we'll go through them one by one. So you got decentralized exchanges. Traditional banks. People can actually participate in these decentralized exchanges by providing liquidity. Let's say Uniswap or Balancer or Mercure Finance. These are one of. I mean, there are a lot of actors in a lot of projects. I'm just summarizing the main ones. So yeah, I'm gonna go. This is a quick introduction into DeFi. So yeah, we're not gonna go too technical or too much into the space because there's tons of applications. So in Uniswap, you can just provide liquidity to let people trade and gain fees from it. You got lending protocols, Avi, Maker, Compound. You can borrow assets. You can use collateral tokens as collateral. You can lend through depending on the protocol, through different interest rates. You got derivatives as well in DY, DEX. You can short, you can long, you could use perpetuals. You got different aggregators that try to get the best price from the different exchanges around. You get staking protocols like Lido. You can stake your Ethereum and gain passive income from just blocking your tokens in there. You got synthetic assets, which are representations of real world assets. They usually rely on oracles like Chainlink because they need trustable interfaces where to rely on to give better good prices and good information, real-time information. And that Chainlink is really good at. We got stable coins as well, Circle US, Tether. These are different protocols that they take money from the banks and use it in the blockchain as well. They have proof of assets as well. I think Chainlink also provides these types of proof of assets as well. We got marketplaces like Blur, OpenSea, where you can trade your NFTs. We got different bridges if you want to move your asset from one blockchain to another, which is very extremely well, extremely useful. We'll go through it as well. You got insurance protocols rely usually on DAIOs. Where you can just get insurance in case you lose your money. And yeah, special mention to data analytics tools. DEXTools is one of them. You also got DeFi Llama. I love it. Subgraph protocol where you can index your smart contracts events and use different APIs to build your applications. So if you have any questions on these, just feel free to ask through Discord, through the chat. I'll be really, really glad to help you out. So moving on, DEXTools, we are experts at decentralized exchanges. So that's where we're best at building analytics tools. So we've learned a lot through these years. And well, this is like the basics of how these decentralized protocols work. All decentralized, well, pretty much most of the decentralized protocols work with ERC interface tokens. So whenever a token implements this interface, it's susceptible to be used inside a liquidity pool. There are two types mainly. I mean, I bet there are a couple more ones, but these are the main types, which are automated market makers like Uniswap, Curve, Balancer. They rely on functions implemented on their smart contracts. So they give you a price based on this equation. There's these types of protocols are build what they call liquidity pools, where you put your tokens in there and let the people trade with them. Uniswap was the first one to, not the first one to choose, but like the one that made the greatest protocol back in 2020. And the rest of the centralized exchanges based their protocols on that solution, which enabled this decentralized exchanges to work well. And they also introduced in V3 the concentrated liquidity. In V2, you couldn't concentrate the liquidity in different prices. But in V3 now you can just concentrate liquidity in different price ranges, which enable better trading strategies and better prices for people and higher fees. And yeah, Curve, it's great at providing liquidity for stablecoins. Balancer, sort of like Uniswap, but instead of just adding 2 tokens to the liquidity pools, you could add more if you like, based on a different system they implement in their protocol. And then you got order books, like traditional order books, like the traditional markets. You got DYDX, which is doing a great job at it. They just moved to Cosmos chain with in their V4 the V4 version of the protocol. And yeah, I encourage you to try all of them. They're really good applications to test to play with some tokens. Liquidity pools, how do they work? So they are actually smart contracts, or one or several smart contracts, and people. What they enable you for people is to provide different tokens. So there would be a provider. In this case, this provider is sending to the smart contract Bitcoin and Ethereum, and letting traders to sell or buy Bitcoin or Ethereum. What these providers get is fees from these trades, small fees from these trades. So it's profitable for them to provide liquidity. This is working like this for years, and it's proven that it's a good solution. Depending on the version, V2 introduced the liquidity and like liquidity pools, but you could not provide specific ranges liquidity. So liquidity is distributed along the price of the token from 0 to infinite. It's the same amount of liquidity in the whole graph. V3 introduced this concentrated liquidity. So if 3 people added 3 different positions, these positions will be summed up like you see in the graph, and the liquidity will be moving around depending on where the people put the liquidity. So this enable a whole new uh, trading experience. It's way better for people to get for traders to get better prices, and for providers to get higher fees as well. Um, um, Another special mention is to the different bridges that connect chains. These are important actors in the DeFi space because they enable interoperability with different blockchains. So you could, as for DeFi protocols, what this involves, it's better. You can move when you move assets to a different chain and you provide liquidity to different chain. Traders spend less trading fees when accessing to these liquidity pools. This happened when Ethereum back in 2021, I think. Trading fees went up to $100 each when a lot of people moved to Binance Chain. But there's also layer 2 solutions that are really good um, at being fast and offering low fees, like let's say Polygon, Avalanche, these the scale solutions. It also helps you to manage risk. Let's say there's a specific hack on a specific blockchain or a specific protocol that is deployed in a very specific blockchain. So if you move your liquidity around through these bridges, you're actually managing risk and avoiding like losing all your funds. Um, Another improvement for DeFi is that you get access to different assets. Let's say your company has a BNB, but your liquidity is in Ethereum. You can move your tokens to Binance and create a liquidity in BNB and let people trade with against BNB, not only Ethereum. And yeah, also there's a lot of new blockchains every now and then, and some projects just want to move liquidity to different blockchains through these bridges because it offers you better visibility. And yeah, being the first in these blockchains, it's also sometimes an opportunity. Okay, another actor in DeFi, the decentralized exchanges, it's or the aggregators. So different decentralized exchanges protocols don't get to communicate them between themselves. So let's say Uniswap doesn't communicate with PancakeSwap, but through this aggregators, you get the best price from both well, from all the decentralized exchanges that you can find in the blockchain. There are also aggregators that offer cross-chain swaps as well. This is the case of Axelar and Squid Router. Axelar is a network that connects different blockchains and helps applications like Squid to to confirm different transactions in different blockchains. And yeah, we have an example here. Let's say you're selling 100K USDT, right? And you want to get Ethereum. This swap is routed through different protocols. You get 34 index. In this is example, you get 34% of your money is routed through Hashflow and Balancer, and it's exchanged through, against Avi, WST Ethereum, and finally against Rapid Ethereum. And the rest 66% is routed through Uniswap and KyberSwap to get your 33.628 Ethereum. And this is how aggregators work. Those are great applications if you're a trader, and great protocols to rely on. So let's move on and talk about these risks. Not everything is is great in the space. You got specific risk related to blockchain and to the DeFi and related to smart contracts, which are what real DeFi relies on. There's tons of risks. I'm not going to go through all of them, but yeah, so these are like the main ones. There's a lot of scams related to to smart contracts. As smart contracts, as decentralized exchanges rely on ERC20 tokens, and it's just an interface. Every token could be implemented in any way. So this leads to different scams like honeypots, rug pulls. Soft rugs is another risk you're facing. So honeypots, let's say the smart contract has a wide list of addresses that can sell their token. So you would buy it and then won't be able to sell it, and that's an issue because you lose your money. Rug pulls is when only one actor or a few actors hold the liquidity of all the pool, and just remove all the liquidity and not enabling people to buy or sell and taking all the profits. Soft rugs is a type of um, of a scam where projects that have little to no use, like let's say meme coins or similar projects, um, create these liquidity pools and let people trade for a while and then start selling their token now and then, and you just see the price goes down. There's also a risk for a lot of protocols face these bugs. When you deploy your smart contract, you have to be sure it's been correctly audited. You need to test it a lot before you just let the people play with it, because it's very risky. Once it's deployed in blockchain, there's little you can do unless you develop a proxy and develop improvements. But yeah, usually it's too late when someone has found the bug, let's say a hacker, and can take let's say all the liquidity from a pool or the tokens from people. You also got bots like front run bots, maximum extractable value bots, sniper bots. These are usually actors that are listening the mempool. Mempool is the place where the transactions are pending to be validated, but are sent, but are already sent to the blockchain. So these bots are listening to these transactions that haven't been validated yet, and they send a new transaction with higher gas than yours and try to get to this try to take profit from your trades before you actually do. There's also a risk for impermanent loss. If you are a pool provider, there's a risk that you lose money while moving your concentrated liquidity position. So let's say the price goes up a lot and goes down a lot, and you're moving your liquidity through different price ranges. You're subject to losing money in that process. So you gotta build great strategies when providing liquidity due to this impermanent loss. And there's also the risk we are all facing, which is not having the sufficient information to interact with blockchain, or let's say you've been shared a different address for the token what you want to buy. Yeah, so these are a lot of the scams based on people knowledge, not knowing what they're doing actually. So this is where a lot of applications we're trying to build trust on it and giving tons of information. Even MetaMask is improving now and then. Whenever you make a swap, relying on these APIs that have audits in real time, let's say, so you don't buy scam tokens or anything. Okay, so moving on. So what are the solutions? Yeah, like I said before, you gotta audit your smart contracts the best you can. These are some of the applications. Hacken or 30 is a great audit companies. They even offer bot protection, for sniper bots, let's say, or similar ones, or front run bots. You also got real time audits from different actors. This is Quick Intel and Go Plus. Those are APIs we have already integrated into our application. They're very extremely useful because whenever a smart contract, whenever a token is updated, let's say by a bad actor, these real-time audits can get aware of it and inform in real time for the traders. Um, yeah, different bot protections. You can code your own bot protection inside of your smart contract. You can even rely on some applications rely on different RPCs that send a transaction to different nodes that the bots, these scam bots, let's say, are not listening to, and so they get validated before they actually get to the mempool. You also got 1inch, a great approach. They developed Fusion, which is your trade is waiting for the best moment to during a small amount of time, let's say 5 minutes. It's waiting for the best moment to apply the swap and get better prices during all that time. You also got liquidity logs and token logs. This is extremely good solution because it gives trust to the people that want to buy or sell tokens. Whenever you lock liquidity, you are telling the people you're not going to rug pull your liquidity from there for the amount of time you're locking your position. Or let's say you lock your tokens, the team tokens, or any advisor tokens. You're just saying, hey, this is my team, this is my team wallet, this is the advisor wallet, and they're not going to be able to sell for this amount of time. Some of the applications that implemented this is Unicrypt, PinkSale, Team Finance. There's tons of them, but well, these are like the main ones. There are also different tools like Telegram bots. Those are great limit order bots as well. You could rely on them as well. And there's also analytic tools that help you get real-time information on what's happening in these liquidity pools as well, and get real-time information from different projects like their social networks, the sentiment of the people, the volume trade, what wallets are interacting or not, which ones are selling or buying. Okay, moving on. I'm going to talk about the analytic apps, which is what we are great at. Why would you rely on analytic data instead of listening to blockchain yourself events or interacting with blockchain events? Well, the main reason is because it's aggregated data. And to build similar approaches, you will have to explore a ton of different protocols, a ton of different data, build a huge infrastructure, which is something that is already provided by us. And this aggregated data involves liquidity, different prices for different tokens, aggregated data for audits from different audit actors as well. Also for the logs, like the ones we said before, aggregated data for logs as well. And you get it just by calling a simple API, making a simple API call. Yeah, you got also aggregated volume and trades. Yeah, and also it also well, this analytic data usually integrate different solutions as well, like aggregators where you can trade from them as well. Water information from your tokens. They also usually include trading bots where you can trade and make limit orders or similar stuff. So it's a great place to check all this information and to partner with as well, because you get access to a ton of people looking at your project and getting real-time information, getting interaction with projects as well. Okay, so what we provide is real-time. What this analytic applications like DEXTools, like DeFi or similar ones, you get usually get real-time analysis, like events. We extract all this information from, let's say, yeah, these decentralized protocols events, like the creation of the liquidity, like adding, removing liquidity, which swaps are being made. You also get risk evaluation in real time as well. These social indicators, you got 1.5 million people a day voting for different projects as well, from different liquidity pools. We also get real-time information whenever a project wants to update the social information. You get trends as well, people visiting, which is the main tokens that are being traded. This might help you to avoid scam tokens. And yeah, what are different use cases as well for these analytic tools. One of them is the price feeds, like oracles like Chainlink use. They rely sometimes on these aggregated APIs. You can, also projects that want to track information, they use this type of APIs. Also trader tools as well, whenever they want to display, or they want to automatically make a trade depending on the price of a token. So yeah, there are tons of different applications, but these are like the ones that first came to my mind. So, and DEXTools, what do we offer? We have, I mean, I can tell we have the best decentralized API right now in this space. We offer analytic data from 90 different, or more than 90 different blockchains, more than 13,000 decentralized exchanges. There's a ton of decentralized exchanges around, more than 3 million tokens and pools. We also provide information from different logs, audit pool scores, social information in real time. If you're building your project and you want to rely on this information, just fill the form. You'll get your free API key and test these analytic data tools. I hope it will help you out with your project and building faster than you expected, and hope you get a great experience with it. And well, this is pretty much all. Thank you everyone for listening. If you have any questions, just feel free to ask in the comments. And yeah, I'll be glad to help as well in the support channel and on Discord. And yep. So yeah, let's move on to the questions.
Awesome. Thank you for this great presentation, Nacho. I saw a question when you were talking about the risk. I'm gonna put that here on the screen. That's a question from Jeter.
I'm not a real expert on the bridge pattern. Would you want to use it to swap tokens? This could be a question more specific for Chainlink developers. We haven't been using it as well. I can tell I've investigated different, like let's say price fees and different approaches that Chainlink offers, but I didn't get into deep dive into the CCIP protocol. But yeah, I would love to do it. So sorry, cannot help with this question.
No
hopefully Chainlink could answer this in their Discord server as well.
Yeah, I just shared the link to the CCIP page. So guys, if you want to learn more about CCIP, you can have a quick jump on that website. And I'm not sure, but I think that we will have some presentation, or you can find a lot of things about CCIP on YouTube. So feel free to search that. And if you have any questions, as Nacho said, Chainlink's Discord is probably the best place to ask your questions.
Totally, we're constantly connected in there, and really glad to give technical or whichever support you need. And yeah, feel free to reach us over there.
Awesome.
And yeah, thanks for your time. I don't know if you have any other questions related to the presentation or to DEXTools, to DeFi. We'll be really glad to answer them as well.
I didn't see any other questions in the chat during the live, so the record will be available. So maybe more questions will arrive about this presentation. But yeah, if you need anything, feel free to ping Nacho on the Chainlink Discord for the hackathon. and I'm gonna ping this Typeform once again. Nacho told a little bit more about that at the beginning of this call, so feel free to complete the form. And yeah, thanks Nacho for your time. Really great presentation about DeFi, and yeah, excited to see what the attendees are gonna build during the hackathon.
Yeah, me too. Me too. So thanks everyone for listening. Thanks, Tanguy, for giving the opportunity to deliver this workshop, this presentation. Yeah, let's build great stuff.
Awesome. Thank you so much, Nacho, and yeah, have a great day.
Thank you. Bye bye.
Thank you. Bye.